But time now to come back to the markets and the earnings review. Mr. Jagannathan, the chairman at TTK Prestige, joins us on the show now. Hi, sir. Good to be speaking with you. This time around, the revenue performance was a bit sluggish, just around 2%. What's causing the weakness in revenue?
There is a serious problem in the market that our segment has not grown across the various companies. Nobody has shown growth, but probably because we had a great time post-COVID, and we're comparing it to post-COVID time. We grew 22% post-COVID, and we have dropped since then, but we're much above pre-COVID levels.
Sure, point taken. But then going forward, do you expect a recovery? Are there signs that perhaps the second half of the year is going to be better? Or as of now, it's difficult to say about FY25 outlook.
No, in fact, the second half of FY24 was better. We grew as opposed to a serious decline in the first half. And as far as I'm concerned, we have seen the green shoots. Our own stores are showing 10% growth for the FY25 compared to FY24 up to now. So we're seeing green shoots.
Could you give us a classification of how much is coming from kitchenware, how much is coming from the traditional business lines, what is growing, what is not growing?
Well, for FY24, the kitchenware, that is pressure cookers, cookware grew smartly by 8%. Electricals dropped, and that is across the board. It's not only us, everybody. Electricals dropped. And but I'm happy to inform you that pressure cookers and cookware grew smartly in volume, 8%. And we expect that trend to continue in FY25.
Penetration levels, according to you, for items like pressure cooker, kitchenware, because in that category, some would imagine that there was a time when you were using that purana kerosene ka chulha to cook. Now everything is replaced by gas, cylinder, pipe gas, and even a pressure cooker. Has the penetration now, as its peak in terms of where the product categories which you are in?
For pressure cookers, certainly the penetration is increasing, but not at the rate which I would like it to. Cookware is very strong. Electricals, there is no improvement in penetration.
Tell us a bit about the competitive landscape, because there is competition which is increasing. If I look at some of your peers also, they are also now entering into the kitchenware space, into the cookingware space. A lot of new existing companies are now moving into that, especially that newfound love for kitchenware. How is the competitive landscape?
Tough, very tough. But we're managing. We're still number one. We've retained the market shares. And so I'm quite happy about that.
Sir, and what about the margins? Because the margins, of course, because of the operating leverage have come down to 13% levels. Do you think by end of this year, that is FY25, they can go back to 15% plus levels?
You must understand that margins have not come down. The sale has come down. So it appears that the margin has come down. Once sale improves, the margins will go back to where they were. The gross margins have not come down. In fact, they've gone up.
Margins continue to be elevated. It's the operating leverage which is not kicking in at the EBITDA level. But could you help us with a breakup, sir, in terms of which geographies are doing better? In the sense, is rural seeing signs of pickup? Is it still urban which continues to be the leader, or the tier 2, tier 3 cities? Any color there?
Urban, tier 1, tier 2, tier 3. We are still not directly handling rural.
Okay, and what about exports? Because that was expected to pick up for you as a segment, even the online digital sales. Can you give us a sense as to where these are headed?
Online is doing well. We grew 20% online. And we expect that to continue. Exports, we had a problem last year that Europe was in a decline. So the stocks were built up by our customers. It's now been eased off. So this year should look very good.
On that note, we'll let you go. Appreciate you joining us in the show. So, of course, FY24 was a bit tough with respect to the industry and the entire segment not growing, but there are green shoots available, and that is something that the market is watching out for. Separately, there seems to be a news on Suzlon at the bottom of the screen. They have got a new order from the Aditya Birla Group, so that stock is high by 2%, while its competitor, or its peer rather, Inox Wind, is down about 5 to 6%. Time now to slip into a very short break, but don't go anywhere. Lots lined up when we come back.